Have you ever had an expense claim rejected by HMRC? You know that sinking feeling, right? Well, what if I told you that that decision is almost never the final word? We've teamed up with the tax specialists at My Tax Accountant to bring you this ultimate guide on exactly how to challenge HMRC and win. It's a feeling so many business owners know. You see that brown envelope, your stomach drops, and suddenly you're looking at an unexpected tax bill. That mix of panic and, let's be honest, frustration is completely normal, and it's exactly why we put this together. But here's the most important thing to remember. You have way more power than you think. HMRC isn't perfect, mistakes get made, and their decisions can absolutely be challenged. This guide, which is built on proven strategies from the specialists at My Tax Accountant, will give you a clear, step-by-step plan to fight your corner. So, here's our game plan for today. We'll start with what to do the moment you get that rejection letter. Then, we'll dig into the real reasons why expenses get rejected. After that, we'll cover your critical 30-day action plan, what happens with reviews and tribunals, how to build a rock-solid case, and finally, when it's time to call in the pros. Okay, first things first. You've got the letter in your hand. Before you do anything else, just take a breath and remember, this is not the end of the road. It's actually the start of a formal process, and it's a process where you definitely have a voice. So let's get to the big question. Can you really challenge HMRC? The answer is a huge, definitive yes. In fact, thousands of appeals are successful every single year. You see, their first decision is just based on the info they have at the time. It's not set in stone. And you can appeal a whole range of things. We're talking everything from your main corporation tax bill to VAT assessments. It covers denied R&D tax credits, which is a huge pain point for a lot of companies, and penalties for filing late, and even interest charges. Whatever it is, chances are there's a formal appeals process for it. Right. Now, if you want to win an appeal, you've got to understand why the expense was rejected in the first place. And it almost always boils down to one single fundamental rule in UK tax law. Getting your head around this is the key to turning things around. And here it is, the wholly and exclusively rule. Honestly, this is the phrase that trips up most rejected claims. For an expense to be deductible, its sole purpose has to be for your business. If HMRC even gets a sniff of a private or non-business reason behind the spending, that's when the red flags start flying. It's not about if the expense was helpful, it's about what your purpose was when you spent the money. Now, this is where it gets interesting, with two key ideas: apportionment versus duality of purpose. Apportionment is totally fine. Think about your mobile phone bill. You can go through it, figure out that, say, 65% of your calls for business, and claim that part. Perfect. Duality of purpose, on the other hand, is a no-go. This is where one expense has two reasons behind it right from the start. The classic example is the barrister's suit. Even though she needed it for court, it also served the private purpose of keeping her warm and clad. That dual purpose meant the whole claim was thrown out. And here's a little pro tip for you. Don't mix up an incidental benefit with a dual purpose. Let's say you fly to Milan for a client meeting, and the weather is amazing. Enjoying the sunshine is just an incidental benefit. The purpose of the trip was business, so the flight is deductible. It only becomes a problem if you plan the trip from the outset as both a business meeting and a personal holiday. That's not all. Here's where most people go wrong. The moment you get that decision letter, a clock starts ticking. You have a very specific and very strict window of time to act. Let's break down exactly what you need to do. 30. That number is absolutely critical. You have 30 days to formally appeal HMRC's decision. And listen to this because it's important. The 30 days start from the date printed on the letter, not the day it lands on your doormat. So if that letter sits in a pile for a week, that's a whole week of your appeal window just gone. Procrastination is your absolute worst enemy here. Okay, your first appeal has to be in writing, but you don't need to be a lawyer. It just needs to be crystal clear. Start with your name and tax reference number. State exactly which decision you're appealing. Then, and this is the most important bit, explain why you disagree. Don't just say, this is wrong. Say, this is wrong because this expense was for a client meeting, and here is the proof. Then, tell them what you think the correct figures should be, and, if you can, show them how you worked it out. So, you've sent your letter. What happens next? Well, if the first officer doesn't change their mind, it doesn't just end there. The whole thing escalates. So let's look at the next steps in the journey, the review and the tribunal. If your initial appeal doesn't work out, HMRC will offer you something called a statutory review. And this is a fantastic opportunity. It literally means a fresh pair of eyes, a completely different officer, someone who knows nothing about your case, will look at everything from scratch. It's basically a free internal second opinion, and honestly, it's a really effective way to sort things out without having to go to court. This timeline here lays the whole journey out really clearly. It all starts on day 0 when they issue the decision. You've got your 30-day window to appeal, then HMRC reconsiders. If you're still not on the same page, they offer that review. If the review doesn't go your way, you then have the right to take your case to the first-tier tribunal, which is an independent legal body. So you see, you get multiple chances to be heard. Okay, now we're at the most important part of this whole discussion. So stay with me. This is where most appeals are either won or lost. It's all about the evidence and the argument you put forward. A winning appeal isn't based on what you think. It's built on a foundation of cold, hard facts. A lot of the time, an appeal against a penalty comes down to whether you have a reasonable excuse. But what does HMRC actually think is reasonable? Well, this table is a brilliant guide. A sudden serious illness? Maybe. The death of a close relative? That could work. What won't work? Things like being too busy, finding their website too tricky, or just forgetting. The bar is pretty high, and the excuse has to be for something unexpected and genuinely out of your hands. And that brings us to the golden rule. Evidence is everything. Let's picture Chloe, a freelance developer in London. She can't just tell HMRC, "I drove for work," to appeal a rejected mileage claim. No way. She needs a detailed logbook with dates, start and end postcodes, and the business reason for every single trip. For a rejected hotel bill, she needs that itemized receipt. Vague claims just don't cut it. Specific, documented proof is what changes minds. And if you need some motivation, just look at how quickly these penalties stack up. For the 2025-26 tax year, being just 1 day late with your return gets you an instant £100 penalty. After 3 months, that jumps to £10 a day. By the time you're a year late, you could be looking at penalties of $1,600 or even more, and that's on top of the tax you owe. The financial reason to appeal an unfair penalty is massive. Whew, we've covered a lot, from that critical 30-day deadline all the way to building your case with evidence. And while you can absolutely handle some of this yourself, there are times when the complexity or just the amount of money involved means it's time to call in a professional. So let's do a super quick recap of the keys to a successful appeal. Number 1, and this is the big one, act fast and don't miss that 30-day deadline. 2, be specific. Tell them exactly what's wrong and why. 3, provide evidence. Prove your case, don't just state it. 4, always stay professional. And finally, 5, keep a detailed record of every single bit of communication. Look, navigating an HMRC appeal takes time, a lot of evidence, and a clear head for the rules. For a simple penalty, you might be fine on your own. But for really complex cases, or when there's a serious amount of money on the line, getting expert help is invaluable. The specialists at My Tax Accountant do this day in, day out. They can help build the strongest possible case for you. You can reach them on +208 570 8531, or you can email them at info@mytaxaccountant.co.uk. And just before we finish, a quick disclaimer. The information we've gone through today is for general guidance only and really shouldn't be the only thing you rely on to make financial decisions. Everyone's tax situation is different, so before you take any action, it is absolutely essential to consult with a qualified professional, like the experts at My Tax Accountant. Thanks so